This is Matthew Dixon bringing you the Traders Report on 3.0 TV. So today we're going to begin looking at gold, and I'll show you in a moment why gold. So going back to the latter part of 2024 and beginning the cycle count from there, we can see very clearly that from that point, I've got this labeled as a wave 4 low, that we're actually in the cycle beginning there. We're in quite an uptrend for gold. Gold's been in a long-term uptrend, and I've actually been recommending this to clients for a long time now, saying that gold should be certainly a part of any well-diversified portfolio. Gold is a very important foundation to any portfolio. Not saying necessarily it should be the major part, but definitely should be exposure to it in any portfolio that looks to have as many uncorrelated assets as possible. And gold clearly isn't correlated directly to the normal risk assets out there, so it's a very important asset to hold. So as I say, we're in a long-term uptrend here. The final cycle that I'm looking at the moment is from this wave 4, and it's broken down into 5 waves. Within Elliott wave, you have impulses are in 5 waves and corrections are normally in 3 waves. So for example, we have a 1, 2, 3, 4, and we can see the wave 4 there is an ABC, that's a correction, and we're working possibly towards wave 5 now. So what's interesting is that following this ABC down for wave 4, we're actually not moving up impulsively, and we know it's not an impulsive move because impulses are characterized by a fact that they don't overlap, the waves don't overlap. So you can see here, this wave 1, wave 2, wave 3, wave 4 does not overlap wave 1 by any stretch of the imagination here. So very clear impulsive move. But here we can see the move up here, down here, then we got a move up here. The move down here overlaps the move up here, and the move down here overlaps this move up here. So it's very overlapping. So this is very important because whilst we do have a correction down ABC, it also appears that the move up at the moment in gold is corrective also. So we can say that we can be bullish gold long term because this is a correction down within a longer term impulse higher. But what we can conclude is that the correction is most likely not complete. So it's going to be a more complex correction than just a simple ABC. So it could be an ABC down, some kind of ABC higher, and another move down before we then move higher in gold. So I am bullish gold longer term, which is quite important for our overall outlook. Gold is basically a safe haven, a store of value, especially in times of trouble. And potentially we could be headed for trouble. We've had a lot of trouble in the Middle East at the moment. That's settled down for now with the peace and a ceasefire between Iran and Israel, brokered very much by Trump at the moment. But, who knows how long that will hold. And there's also an awful lot of other trouble brewing, geopolitical troubles brewing in the world with, of course, we still have Russia, Ukraine. There's still a lot more in the Middle East. A lot of nations around Israel that are still antagonistic towards them. So there's lots of trouble in the background. So gold will still probably shine as that safe haven. And I think it's certainly where people go in times of trouble. So all I'm saying is, whilst I do believe longer term, we're going to head higher in gold, short term, we're going to head lower. Now, the reason I'm focusing on gold, as I say, it's a safe haven store of value. It's where people go in times of trouble. So I think maybe there's a bit more trouble ahead, but certainly we will trouble ahead, and people will pile into gold probably as opposed to other assets. And I think that's the case. I like to look at Bitcoin or sometimes assets in relation to gold. I actually think gold is a really hard currency. It's actually, as I say, it is a safe haven. It's a harder currency, I would say, than the US dollar. The US dollar is manipulated by money printing, quantitative easing, by economic policy, by changes in interest rates. So the US dollar is very, very transitory, waves in the wind a lot. It's not a hard currency, but gold is a much harder currency, I would say. And in times of trouble, it is where people go. So looking at Bitcoin gold, this is a reasonably long-term view again. At the moment, I think possibly we're certainly this looks like a correction down here in the form of an ABC. So I think we're headed higher for the time being with Bitcoin gold. That would mean Bitcoin higher in relation to gold lower. And that's actually what we saw on the gold chart, that potentially we're going to see a bit lower in gold. And when we move over to the Bitcoin dollar chart in a moment, we'll see there is real potential for Bitcoin to head a little bit higher yet. But it could well be that we're getting closer towards the end of the cycle in risk assets, in Bitcoin, etc. So this is very, very important, because I think I mentioned in the last show that there's only a few times historically in financial history where gold has really outperformed these risk assets, and it is in times of real trouble. So it happened one of the times it happened was in the 1929 market crash, 1929, 1930s, where we had one of the most severe market crashes in history. And that's when gold outperformed assets, risk assets like the stock markets. That was one occasion. Next occasion, big occasion, was in the early 70s with the oil crisis. And again, massive sell-off in stock markets. And that's when, again, where we saw gold outperforming these other risk assets. Now we're beginning to see signs of that again, of a potential rollover in risk assets against gold. We've already seen it actually in the S&P. So I'm just saying there are warning signs flashing. It's not imminent necessarily. And I think this chart tells us that risk assets like Bitcoin still probably have higher to go in this cycle, but the signs are beginning to show that we're getting towards the end of a cycle. And I'll just flip over quickly to the S&P 500. And this is the long-term view. Again, I think we've got an ABC down. We've got potentially an ABC higher, or it could even be a 1, 2, 3, 4, 5 higher. It doesn't really matter. I'm just saying we're probably getting towards the end of a cycle. And if I just scroll out, we have looked at this. This is one of the most important and predictive chart patterns there is in technical analysis and in trading. I came out very clearly the other day saying we've labeled this as a triangle. This is 3 down, 3 up, 3 down, 3 up, 3 down. It's labeled as A, B, C, D, E. And then this is a pre-terminal wave, and the wave following it is what's called a terminal wave. So it's the final impulsive wave in this cycle. So this corrective consolidation triangle gives way to a final thrust, and this is what I've said here, S&P 500 thrust higher. Even before it happened, I said to people, I'm going long, this is going to thrust higher. I've made more money in this chart pattern formation than any other chart pattern. It's very, very predictive. So we got the very nice thrust higher out of it, and I think there's probably a bit higher to go, and I think we will probably at least challenge the previous all-time high in the S&P 500 at 6150. So I think correlated risk assets like Bitcoin will also head a little bit higher. So that's just telling me that we are in a push higher, but what's really important is that's pre-terminal wave. This is a terminal wave. It's the final wave in the cycle. Then we get a pullback. So I'm expecting higher with the S&P 500. If I flip over now to Bitcoin, let me just move over to Bitcoin, we can see that Bitcoin's in a similar sort of situation. I haven't labeled this as a triangle, but we have got a corrective wave to the downside, A, B, C correction to the downside. And then we got a really nice impulsive move to the upside. So again, I think we're possibly, a bit like the S&P, going to challenge the previous all-time high for Bitcoin. We could potentially just break it, but actually I think we're going to challenge it at least around that 111,000 mark, somewhere around there. Would potentially be a nice little 5-wave move to the upside, potentially giving us a double top on Bitcoin, and potentially then rolling over to give us a downturn in risk assets like the S&P 500, like Bitcoin. And the story is pretty much the same across the board, that we're seeing a final impulsive move. I say final, it depends what cycle you're looking at, but certainly within this cycle, after this push up, 5 waves push up, we would expect certainly at least a 3-wave pullback, and that 3-wave pullback could be quite substantial. So I'm just saying, at the moment, enjoy the ride. Markets are moving higher, and I think they've got a little bit higher to go, certainly, but we could be due a pullback reasonably soon. Even with Ethereum here, again, we've got a very clear ABC pullback, and we can see the beginnings of a move higher. Now, the issue is with Elliott Wave, you have actually what are called fractal cycles. It's like Russian dolls, where you get smaller dolls within dolls within dolls. And it's the same with waves. We can have five waves, but those five waves can be within a larger five waves. So these five waves could make up a wave one, and then you get wave two, three, four, five, and a larger cycle. But this cycle, you can actually see we're working quite nicely with wave one up, two down, three up, four down, five up. There's no overlap there. That's a nice five-wave move. But I suspect because this looks like an ABC move down, that's against the trend. So I do think that we have higher to go with these markets. And this is probably just a larger, this is five waves, but makes up a larger wave one. And then we get three waves back in wave two. And then we get another bigger push up in wave three. So Ethereum is actually giving me some reasonable hope that the market bull run isn't over yet. We should probably see, maybe we don't just challenge all-time high for Bitcoin, maybe we break through and get all-time high, because Ethereum is telling me that we do have quite a bit of upside to come. And this is one of the most important tools. I look for correlations across markets. These assets don't just move by themselves, very rarely, unless there's some specific fundamental news for an asset. So they tend to move in concert. They move in a correlated way together. And even across asset classes, you see correlations. So we'll just focus finally on a couple of other assets that are interesting correlations. So we've got oil here I'm showing. Again, we predicted that there's going to be a downturn in oil. We got a very important indicator here where we basically got higher highs in price, got lower highs in corresponding RSI. That told us that we had regular bearish divergence, told us there was going to be a sell-off. That's precisely what happened. Now, I think that we're probably getting towards, this looks like some kind, it could be a 335 sell-off to the downside. That's a correction. So I think the oil price is at some point in the near future, maybe got a bit lower to go, but it's going to rebound higher. That tells me, again, there's some risk coming, possibly in the not too distant future. So I think we'll finish on, well, maybe not finish, we'll just have a quick look at the dollar index. Dollar index is really important because, you know, we've seen on previous shows the correlation that there is long-term positive correlation with Bitcoin, short-term a negative correlation. So when we see dollar index going down, that's usually Bitcoin higher. Now, dollar index potentially has a bit lower to go. The FTX low in the Bitcoin price, which was around 15,500 way back here, correlated with a dollar index high of around 114. So then dollar index started to fall whilst Bitcoin was rising. So dollar index is still falling and we see Bitcoin rising. We're close to Bitcoin all-time high, aren't we? It looks as though we have a bit lower to go with dollar index. So it looks as though we probably have a bit higher to go with Bitcoin. But potentially there's a reversal coming. I say potentially because there's never absolute certainty in markets, but we look at all the signs, all the indicators, and we make assessments of risk. So the risk is that as we hit this lower long-held parallel support channel on dollar index, if we hit that support and bounce higher with dollar index, that could be negative for risk assets. So this is what I told you before. There are some warning signs flashing, and we can look at different signs. This is one of them, that dollar index is potentially going to bottom out. Now, it could be that we break through with dollar index and break through this long-held support and start to move to the downside. That will be positive risk assets. But just going back to my original chart, the earlier chart I looked at with the S&P 500, that triangle is very telling. We're in a terminal thrust out of the triangle to the upside on the S&P 500. We'll probably just briefly touch on that once again. In this terminal thrust to the upside on S&P 500, that is a terminal wave. So following that wave higher, we should at least get a pullback, at least three waves pullback. So that's telling me there's some negativity coming, and that correlates again beautifully with my view on dollar index here, that we're potentially just going to go a little bit lower before we bounce higher. So everything is tied together. It's like jigsaw pieces in a puzzle, and all those pieces actually fit together to give you a very, very clear picture. So we don't have time today to go through all the other assets, maybe on the next show, but I think that gives you hopefully a clear view as to my expectations. Basically, to summarize, I'm expecting a little bit lower on dollar index. That would probably give me a little bit higher on most of the assets, risk assets like Bitcoin. Other altcoins, cryptocurrencies will probably head a little bit higher as we head lower in dollar index in days to come. But there's potential for a reversal higher in dollar index, and that will be potentially lower in risk assets. So hope that helps. Thank you for listening, and look forward to catching up at the next show.